Well, this is a pretty punchy GDP number for the third quarter of 2013, a 0.8% increase. That's up from 0.7% in Q2. We've now had 3 successive quarters of GDP growth. Chancellor George Osborne, with these figures, will be saying the UK economy has well and truly exited recession. He's been tweeting, we're on the path to economic prosperity, and he'll certainly be crowing that his erstwhile friends in the IMF have been proved wrong in terms of downgrading the British economy. And also in the growth versus austerity debate, it really will be the Austerians today and into the weekend who will be saying that they are in the ascendancy. The soft left, if you like, has been proved wrong. An economy can grow even when the state is consolidating. And I must say, looking down into the numbers, there are some pretty interesting sector headlines. We had a 1.4% increase in agricultural production, a 0.5% increase in industrial production, a 2.5% increase in building and construction in the third quarter. That's the highest quarterly increase in that key bellwether sector since the coalition began, since the second quarter of 2010. The service economy, which is usually the engine room of the British economy, slightly slower at 0.7%. I would say, though, that there are a few caveats here. The first caveat I would say is that we still remain in a situation where the economy, according to the ONS, is 2.5% lower than it was prior to the Lehman crisis. If you look at where the economy was in coming out of previous recessions, particularly in the early 90s and then in the early 80s as well, but also in the early 70s, at this stage on, 5 years, if you like, from the initial shock, the economy would have been 6, 7, 8% bigger than where it started. I'm afraid that isn't the case this time. This is still the slowest, most gradual, most tortuous, if you like, economic recovery in modern British history. The other caveat I'd say is in terms of the balance of the economy. Of course, the coalition has put an awful lot of emphasis on we're going to rebalance UK commerce. I'd say that isn't happening. We've got a 1.4% drop in business investment buried in these numbers. They'll need to be drawn out as we go through the entrails. And within that, a particularly sharp drop in the investment in capital goods. And it's those capital good investments that really drive growth going forward and really do strike a pose, if you like, in terms of how entrepreneurs are feeling. It's all very well to respond favourably to a CBI survey, to any kind of industry analysis of where the economy is going. And in the run-up to these GDP numbers, we've certainly had an awful lot of those, if you like, kind of good mood music to try and get the British economy moving. But entrepreneurs, where it really counts is what capital goods they're buying, and those capital good purchases are still pretty low, not least because bank lending to businesses is still very low. Also, you have a very seriously bad trade numbers. We had the biggest trade deficit in 34 years in the UK last year, and into July and August the trade numbers were also particularly bad, a £10 billion deficit in August, and particularly low trade to the emerging giants of the East, the markets we must trade with. And the other big caveat, I'd say, is the inflation numbers. Yesterday, in the run-up to these numbers, it was almost lost, but there was a very striking survey of inflation expectations from YouGov, and we now see that in October, average inflation expectation was 3.2%, which was up sharply from 2.5% the month before. All this talk of high energy prices, high fuel bills, obviously seeping its way into the public consciousness. If you look at the 5 to 10 year outlook for inflation in terms of consumers' expectations, a very, very sharp jump, 3.3% annual average in September, up to 3.9% in October. That is by a very long way the sharpest increase in inflation expectations we've seen for many, many years, and certainly since this YouGov poll began. And remember, a lot of these good GDP numbers that we're seeing, a lot of the good GDP numbers that are now going to seriously influence the political debate in the next few months are, of course, predicated on those ultra low interest rates. Of course, the Bank of England's base rate having been nailed down to 0.5% since mid-2009, unprecedented in British history. And of course, the Bank of England's forward guidance under Mark Carney of those low interest rates carrying on and feeding into the housing market and trying to make entrepreneurs feel better about the world, they are predicated in terms of that forward guidance on inflation expectations remaining low. One of the few knockouts, if you like, one of the few events that the bank flagged when it first issued the forward guidance of things that could cause it to increase interest rates was, quote, a sharp increase in inflationary expectations. Well, I'm afraid to say that despite all these very good headlines, we just had that sharp increase in inflation expectations, and that will certainly weigh on the mind of business leaders going forward.